Okay, this is an example of problem number 5. And we have Bob Company, they're a merchandiser, and they've provided us various information. First, we want to prepare a traditional income statement. And the way we do that is sales minus cost of goods sold gives us gross margin, minus our selling and administrative expenses gives us net operating income. So the way we would figure out our sales are our units, which were 1,000 times 70, and that gave us 70,000. Our cost of goods sold is beginning inventory of 11,000 plus purchases, which were 30,000, minus ending inventory, which is 14,000. So that gave us 27,000. So our gross margin is the 70,000 minus 27,000, which is 43,000. Our selling expenses, we have a variable portion and a fixed portion. The variable portion is $3 per unit, so 3 times 1,000. The fixed portion is 10,000. So if we add those together, we get 13. Administrative expenses are $2. $2 times 1,000 units plus 12,000 gives us the 14,000. The 13 and 14,000 added together is 27,000. The 27,000 subtracted from the 43,000 gives us a net operating income of 16,000. Next, we want to do an income statement in the contribution format. Our sales will stay the same, and our net operating income will remain the same. It is the items in the middle that we change a bit. So, what the contribution margin format is sales minus variable costs gives us our contribution margin. We then subtract fixed costs to get our net operating income. The reason we divide this between our variable and fixed costs is because there's a lot of quick decisions we can make having that information. So that's the whole purpose behind it, is to make some real quick decisions. So in this case, we already know our sales. They were 70,000. We know our cost of goods sold is 27,000. We already figured out our variable selling, 3,000, our variable administrative. So our total variable expenses are 32,000. 70 minus 32,000 gives us a contribution margin of 38,000. Fixed selling cost is 10. Fixed administrative cost is 12. 10 plus 12 is 22. 38,000 minus the 22,000 gives us 16,000. So as I said, our sales, we start the same. They were exactly the same. And our net operating income is the same. So we start and we end the same.